just go ahead and start.
Okay, very good. Thanks for letting me have the opportunity to speak to you on behalf of SCORE and WEOC and talking about finding the money. We're going to talk about two ways, the traditional way of finding money and then some of the more non-traditional or online ways of finding money. And obtaining capital, depends upon how you present your business and your financial needs to the lender. Most businesses obtain financing through loans, investors, or with their own funds. You need to have a well-written and documented business plan, including financials. You'll probably have to bring your tax returns and your personal financial statements. And existing businesses will need to bring historical earnings, 2 to 3 years if they're available. You need to demonstrate good character and that you're willing to share the risk, and that most lenders are going to expect you to have 20 to 30% of your skin in the game, and you need to have acceptable credit. Options are personal resources such as savings, insurance policies, profit sharing, second mortgages, outside resources, friends and families, investors, business partners, commercial lending resources, lines of credit, term loans, business credit, cards, short-term or temporary financing, and then government resources, grants, U.S. Department of Agriculture.
And just to jump in here real quick, at the end of this session today, we're going to discuss the relief funding loan options that we have, and we do have Luann, our representative from the SBA office here, so please continue to stay until the end and we will answer questions at that time. Thanks, Bill.
On the personal resources, which is often the cheapest and easiest way to get money, the first one is savings. You just need to plan ahead and then use it as you see fit. Personal loans, you get fast approval, usually at a lower rate than a business loan. In terms of personal loans, a secondary mortgage on your home, if you have equity, will be at a very favorable rate. And you can usually get fast approval upon that. Credit cards, it's easy to get money on credit cards, but I personally don't recommend it because of the interest rates that can be encountered. And then from your profit sharing or 401k plans, there are programs available where you can withdraw from those. One of them is called a CEO plan without having to pay a penalty, the 10% penalty for early withdrawal. Third-party resources would be friends and families. That can cause some issues with your friends and family, but you can decide whether you want to pursue that or not. Limited partnership for a minority partner that can bring cash to the business and would probably want some percentage of the ownership. An angel investor, usually looking for high return and an exit strategy. And crowdfunding, it's a rapidly growing way to fund startup costs. And online, and we'll go into that in greater detail later. Government resources, grants, it's essentially free money that does not have to be paid back, but normally grants are for not-for-profit businesses rather than for-profit. Be eligible for a grant, they do not fund usual retail, service, or manufacturing businesses. Majority of grants are given by foundations and government entities for performing research or supporting a cause. Online resources for that are grants.gov, the SBIR Gateway, and the Indiana Economic Development Corporation. And the links are indicated on the slides.
Again, I'm going to jump in real quick, so sorry.
Please, by all means.
On the last slide where you had the SBIR, that gateway, that can be a really good opportunity. And actually at the NIC right now, we have a program going on where we will help pay a grant writer to apply for the SBIR funding. So feel free to reach out to the Northeast Indiana Innovation Center because there is a program doing that right now.
CDC has numerous programs, industrial developments for fixed assets, $300,000 with a bank, SBA 504 for long life fixed assets up to 5 million. You can refinance also up to 5 million. The Fort Wayne Allen County Opportunity Fund, again for fixed assets, inventory, and working capital, 100,000 with a bank, 30,000 without a bank. The Enterprise Zone Loan Fund, fixed assets, inventory, working capital, $50,000. In rural development, fixed assets, inventory, working capital, 20,000 with a bank, 15,000 without. Contacts at the CDC are as indicated, and there's a web link.
And
just one note on that last slide with the CDC, Misty Ryan's not there anymore.
She left? Okay, thank you. I thought perhaps that was the case, but I didn't update it. I apologize.
And when we're talking about fixed assets and things with those loans, on that previous slide just before this one, can you help people understand exactly what some of this means?
Well, it could apply to equipment, you know, something that not operating funds, but investment in equipment, building, and so forth.
The 504 loan program finances, the target is at long-term assets, longer-term assets, and oftentimes they won't get up and walk away. So you're looking at land and equipment, and the equipment can be mobile. Some of the CDCs have financed, for example, food trucks as an equipment purchase. The target of that program is not to finance accounts receivable, inventory, general operating type funding. They can do a small portion if need be, but the target of that program is to finance the longer term fixed type assets.
Okay, that's great, because I think what happens is a lot of clients come in looking for grants, but also looking for ways to help sustain their business. And so I just wanted to point out that on this screen, we're saying it has to go towards something that the bank or the SBA or that there's something that they can come back to and have as collateral. Correct?
Yeah.
Okay.
Yes, they're collateral type loans for the 504 program. The other programs that are listed there are not SBA related. They're more of local government type financing, so I'm not quite as familiar with those. And then outside of our 504 program, if you do need the operating type of financing as well, we do have other programs that can fit along with the 504 program and these other programs that they have as well to provide the operating type financings needed too.
Okay, great. Thanks, Bill.
The Department of Agriculture also has some programs for rural and community development for business industrial loans, up to 10 million. They'll guarantee 60 to 80% of the loan amount. And the purpose of the loans would be for business and industrial acquisitions, land, equipment, and working capital and refinancing under certain conditions. Project-specific funding, we talked about the SBIR earlier, but that's primarily focused at technology. They'll fund through the research and development phases, and you can go through like 11 different federal agencies for funding for that. Exploratory up to 100,000, R&D up to 750, and after that, kind of limits what the SBIR funds. The 21st Century Fund will match the federal SBIR money. Awards commonly reach like $2 million. There's 3 phases: submit a 1-page application, submit a technology plan, and submit a business plan.
And so, Luann, I don't know if you can help with the SBIR, I know a lot of our clients are tech clients. So not to drill down too much into the weeds, but say they're creating an app for real estate or something. Is that going to be applicable for an SBIR, or is this more for someone who is looking to maybe help ways to technologically advance agriculture? What would you say?
I'm not well versed in the SBIR program, so
Okay.
sorry about that.
No, that's fine.
I know that. Yeah, I'm not. I'm going to say I'm maybe a little dangerous in talking about that right now.
Okay, completely understandable. But please call the NIC because I know that they have that program if you are interested in learning more.
Another interesting program, and I have participated in this from a personal investment standpoint, but the state of Indiana has a venture capital investment tax credit. Whereas if the company is approved, an investor can receive the lesser of 20% or $500,000 Indiana tax credit for investments in an approved Indiana business. Both the business and the investor has to register and be approved by the state. So that's a good way to get money into your business and give some return to the investor outside of what your business income would provide for them. And then who's your business investment tax credit? It's the tax credit for businesses for capital investment. So any questions?
Go ahead. So when we're thinking about the venture capital investment, and since you have been involved with that, Bill, what would you say, can you give us a little information on that as far as from your standpoint as either as the investor or if you've started a business and utilized it?
Well, if you start the business, if you're starting a business, you need to apply to the state to get approved for the venture capital program. Then once you're approved, you can go out and solicit people to invest in your business. And if they do, they can get 20% of what they invested as a credit against their state income tax.
Okay.
So I went for a period of probably 7 or 8 years not having to pay state income tax because of an investment I had made.
That's wonderful. And then did you receive a certain portion of the company's assets, or was it just the tax credit?
No, both. You get, it depends upon what the deal is, but if you're investing in a company, usually you're getting stock or an equity position in that company.
Okay, fantastic. Thank you.
Now this is from a presentation made by OnDeck ForScore. So they're going through some simple steps to choose the right financing, and this financing relates particularly to the online things that are available now, or the non-traditional types. One thing I didn't mention when we're talking about traditional financing, the first place you go is your bank or your credit union, whoever you do business with now. And if you exhaust them, then you can go to people like Brightpoint. Brightpoint can loan up to $50,000, $20,000 if you haven't been rejected by a bank, and up to $50,000 if you have been rejected by a bank. So.
And part of that goes back to what your credit score is personally, as well as for the business, correct?
Correct. And Brightpoint may be a little more lenient on credit score, and their interest rates might be a little bit higher than what conventional bank or credit union financing might be.
Okay, great.
There's a lot of paperwork involved in getting a loan. If you've ever applied for one, you're aware of that. But the good news is that there are quick ways to do it now, new options available that are timely. And one thing we'll see here is that the faster you can get the money, the usually more it's going to cost you, and we'll approach that. And the retail things that are going on that are impacting businesses today online, retail and brick and mortar stores are being impacted by things like Amazon, travels being impacted by Priceline, TripAdvisor, retail real estate, Zillow, auction.com, payments, PayPal, and Square. So the capital sources, banks are being affected by things like OnDeck, Billfoot, Lending Club, and Kickstarter. Go in a little more detail on that as we progress here. The traditional lender, long application process, significant paperwork, personal credit score is baselined. They lend large amounts, often require very specific high value collateral. The online lenders has a short application process, less paperwork. It's more of a data-driven approach. They lend smaller amounts. They'll work with younger businesses, and they often do not require collateral. We'll be more specific as we go. So let's look at new financing options. For nonprofit lenders, crowdfunding, invoice financing, offline lending, and loan matching sites. Nonprofit lenders, we've got Kiva, Axion. Can we move that up away? Let me see if I can move it on my screen. Yeah, thank you. Kiva, Zip, Beta, Axion, tilt forward. The payments, depending on the lender, you pay low interest rate and fees or no interest at all. Benefits, it's good for startups and micro businesses. It's good for community-oriented or civic-minded businesses. Lenders often offer free mentoring or guidance.
As a women's business center, we get together once a year with other women business centers. So there are 122 throughout the country. And one of our centers located in Wisconsin has this amazing Kiva hub there. And I got to listen to how they run that. And it is a really cool program. One of the benefits for something like this is that this is kind of before you go to the bank, or maybe after you have no options, depending on how you look at it and where you started. But what a lender can see when you do something like Kiva is they can see how savvy you are with utilizing social media and marketing. They can see how quickly you are able to start paying back on those interest-free loans, how you're going to interact with potential customers. So these lenders are then able to see how business savvy you are. And sometimes that may be all that's needed to get to that next step where you could go into Breakpoint or Bankable.
Good fits for nonprofit loans. An eco-friendly clothing retailer that donates a percentage of each sale to charity needs $10,000 to expand the business. So what is a fit? Startups, micro businesses, mission-driven businesses, local businesses in underserved communities, and possible sources. You mentioned KVZip, Leslie, Axion, and AEO Tilt Forward. I'm not personally familiar with those. I'm just sharing this information with you.
And Brightpoint is actually in Fort Wayne, and Bankable is in Anderson. So those are also two other nonprofit organizations that provide SBA type financing as well, that are nonprofits in the area.
Crowdfunding. This is an example. Someone needs 40,000. They go to the crowdfunding site and post their idea. A network of individuals pool their monies to support the efforts. Indiegogo, Kickstarter, Rocket Hub, GoFundMe are all examples.
And I actually have personal experience with this. I have done a Kickstarter campaign. I do want to suggest that knowing and doing all of the things that they give you a lot of resources to follow within their sites on how to run a campaign. Really paying attention to their suggestions is key. there's a whole thing about how you kind of prep the customers or the funders that are in their network that you're coming. And then also starting to accumulate funds before that Kickstarter campaign really goes live, so that you can take this $50,000 infusion, put it in there so that everyone on that platform sees, oh my gosh, this is doing really well, I want to give too. So there are some things that I learned through crowdfunding. I also hired a marketing company to help run my campaign because it is so time intensive. And that didn't work out very well for me. It doesn't mean that it won't for you, but I know for the group of people who use this particular company, it did not pan out very well. So making sure that you do a lot of reference checks for them. So that's my 2 cents on that.
Thanks. There's two types. One's a donation or purchase-based funding. That's where people commit money to your company in exchange for products, perks, or rewards. An example is a guy needs $50,000, finds 1,000 individuals contributing $50 each. It's one way to get it. The second one is investment crowdfunding. That's where a business is seeking funding to sell equity stakes in their company. 10 individuals each invested $5,000 for a combined 10% equity stake. Again, that's all a negotiation process. But again, it could get up to the $50,000 that way on a smaller base. You usually need something to give the investor product or equity in the company. Some sites require business owner to pay a fundraising fee, 5% of funds raised, or a fixed monthly fee during the fundraising period. And you may have to give equity to investors. Benefits: the business can get in front of potential supporters, investors who can provide financing very quickly, allows individuals with limited access to fund the opportunity to participate, and it's kind of a market validation situation. Can be challenging. Many projects don't get funding, and it requires that investors must be an accredited investor. I'm not sure what that process are. Are you, Leslie?
Yes, an accredited investor is someone who has already been checked out to make sure that they have a certain dollar amount in the bank that they can play with. And Luann, you might know even more about that. And then when it says this can be challenging, that is no joke. When you look at the statistics, an average raise amount is about $9,000. Now there can be some that are $1 million that actually get funded on Kickstarter and some of these, but the majority of them that are successful are around $9,000. So make sure that when you are putting your goal out there, it's very achievable and you can do it in small chunks. So you can tell everyone, hey, I did a campaign, it was successful. Now we're on to the next portion of funding that we're requesting, and we're gonna do another 9,000. So that it's that whole successful thing that people, we're, you know, a flock of birds, we're all just gonna go to the same thing. We wanna make sure that our dollars are gonna go to help someone that's already in forward movement.
So good fits for crowdfunding. Not yet established businesses with a great idea for a product, or somebody's looking for market validation. Kickstarter, Indiegogo, Rocket Fund, and GoFundMe are options. Invoice financing. It's basically where you sell your accounts receivable to a third party. Blue Line and Fundbox are examples of that. And they kind of discount your receivables, pay you a percentage of 80 to 90% of your receivable, and then when they collect it, they keep the difference. Fixed payment, the payment is fixed payment on a fully advanced amount of your outstanding invoices, or advance a percentage of your outstanding invoices and then pay the remainder set on their fees and when they become payment. some people call this factoring. Benefits a business can receive cash quickly instead of waiting for customers to pay invoices. It's typical for larger, more established businesses. Hopefully most of our small businesses are doing on a cash or credit card basis. So that's what we strongly recommend.
You know, when I worked for Vera Bradley, we had to do we wanted to do contracts. And the whole idea of selling by contract is they actually give you the money up front and you only make what they have now said they wanted to buy. And that's an amazing opportunity. Rarely do things work like that in business. So when you can make that happen, it's the best situation. You're only going to produce what is currently in demand.
Yeah, that's a great setup. So a good fit for invoice financing. You know, if you're doing business with someone that pays you 30 days or 60 days or even 90-day terms, you know, you can get your cash up front or a percentage of that invoice up front. And you can do it through two options here, Blue Vine and Fundbox. Online business loans, here's a whole cadre of them: On Deck, Cabbage, etc. Lending Club, StreetShare, SmartBiz. How they work: you apply online, they review and approve, and you get your funds within a day to 2 weeks. But here's what I mentioned earlier: the faster you get your money, the higher the cost is going to be. So this graph, as you go out to the right, is speed. And as you can see on the low end of banks in terms of speed and low on cost, factoring is higher on cost, a little faster. Online loans are very quick and costs are even higher. And then our merchant cash advance is at the top of the line. Which would you prefer? This is interesting here. To pay a 67.5% annual percentage rate or a 22.5% annual percentage rate. 1 year, if you can pay a 67.5% interest rate for a short period of time and end up with only $1,500 worth of interest costs. Whereas if you finance something over a number of years at 22.5%, you can end up paying $4,800 in interest costs. So it depends upon, this is $10,000 borrowed over 6 months at 67.5% interest rate. And this is $10,000 borrowed over 4 years at a $4,800 interest cost. I said interest rate, $1,500 interest cost above. So if you can end up with less money out of pocket paying a high interest rate for a short period of time than you can paying a lower interest rate over a longer period of time. So it all boils down to cash flow. Online business loans, fixed interest and fixed payments, auto debited from your business bank account on a daily, weekly, or monthly basis. Approvals can be fast. Decisions are based more on just than the personal credit score. It's ideal for business opportunities with an expected shorter return on interest. Considerations: no startups. That's excess and interest rates or loan amounts and term lengths vary depending upon the company. Established businesses already generating revenue, potential sources: Funding Circle, SmartBiz, Cabbage, and On Deck. Loan matching site: somebody needs $40,000. They visit a matching site. They filter information out and suggest best lending options. This is SBA link. It doesn't really have anything to do with the SBA, but there's Bowfly, Fundera, and Lendio. It won't cost you anything to use a loan matching site. The site earns referral fees from whoever ends up lending you money. The borrowers can get in front of significant numbers of lenders very quickly, filters out lenders that are not a match, and can help you find lenders you normally wouldn't find. And you must still apply with the individual lenders. You're often still lending traditional lenders with their strict requirements. Uh-oh, here we go, I'm sorry. So here's some sample financing scenarios. So if you want to open a new franchise and you need $300,000, they suggest you look at like a loan matching site or an online business loan. If you're developing a new product, $15,000, they suggest you look for crowdfunding or a nonprofit lender. Buy discounted inventory in 4 days. Look at online business loans, short term. Manage cash flow during receivable gaps. Look at invoice financing or online business loan short term. Many people use lines of credit for that also, particularly if their business is seasonal. And if you're looking at launching a first marketing campaign, they're suggesting you look at a nonprofit lender.
So thinking of those things, especially right now with our current situation with the virus, when we're talking about that managed cash flow during receivable gaps, that is right now. We are, again, at the end of this call, going to go through the loan process for the relief funding. But please note that that's what we're in right now. So if you're wondering, where do I fit in? I know I just need money. That area, that manage that cash flow, is where most of the small businesses are at this point. So again, just stay on until the end and we will go through that loan process.
So before you start, there's 4 questions. You need, what type of financing can I qualify for? And which of those is the best fit for my business? How much do I really need? And do I have all the information I'll need? So again, this was available, made possible by OnDeck in partnership with SCORE. It's one of the presentations on our national website. I'd like to also point out to you, while we have the opportunity of some pre-recorded webinars we have on our national SCORE website. If you go to www.score, click on Take a Workshop and select Recorded Webinars, and then you can narrow by the business stage you're in, whether you're a startup or in business. Then you can narrow by topic, and then all you have to do is click on a registration form, put in your name, first and last name, your email address, your zip code, and click on Submit. They're available 24 hours a day, 7 days a week. And this is what the website looks like. Again, you would click on the Take a Workshop and then go to Recorded Webinars. And then these are the topics, marketing. At one point in time, these are the topics that are available. The numbers after that are the number of webinars that are recorded by industry experts. So you can see there's marketing, online marketing, operations, finance and money, etc. It continues on down the page. So it's a good resource by industry experts. So, and if you're not familiar with SCORE, that's where we are located in the NIC. That's the email address for our chapter admin, our website. We have branches at Angola, Huntington, Kendallville, and Warsaw. So thanks for allowing me to participate. And I'll give it back to you now, right?
Yes, thank you so much. And I will say that personally, I go to the SCORE website and use their webinars or your webinars. They're really good. And I like to show them to my clients as well. And every time we have a new hire on staff, I have them go and utilize those as well. So I definitely suggest trying them. Okay, I'm now going to share my screen and we are going to walk through, if I can find it again, walk through what are the details around the disaster assistance. And Luann, who is our SBA representative, Luann's here and she's going to help us as well. Okay. let me find this for some reason that doesn't want to show. I think maybe it's right here. Okay, can you see? Yes, okay, I can see my screen. So a couple of things we want to note about this disaster assistance option through the SBA is right here where it says they are loans that offer up to $2 million of assistance and can provide that support at times just like this for those temporary losses. So this isn't going to work for something's going on with your business in particular. This is something that's going on, whether it's like you see over here, a hurricane or an earthquake or an extremely viral virus. So what these do is they can be used on fixed debts. That means, again, on those machines that you've purchased, on maybe vehicles, on, you know, Luann, tell me if I'm speaking out of turn, but on things that have
something that's going to have a monthly payment, a monthly recurring payment. You know, that's going to be your real estate, it's going to be your equipment, that type of thing is going to be a fixed type of a debt.
Okay, your payroll, which is so hard to cover during times like this. You see a lot of things that are going on right now where the restaurants are taking profits and giving them to their workers instead of paying rent. Luckily, their landlords are able to do that right now. Not everybody can, but something like that. Accounts payable, some other bills. So the interest rate is at 3.75 for us. There, it's a little bit lower for nonprofits. Remember that we all basically operate the same. You would operate a nonprofit with those same building blocks that you would a small business, but you're getting your funding from different ways for a nonprofit. So this also says, do you want to walk us through this portion, Luann? Up to a maximum of 30 years.
Right. What the program, the disaster program, is designed to do is to provide funding, needed funding, operating cash that you're, for in this situation, you're a loss of revenue. So they're trying to give you funds to operate on, but extend the term out over a long term. We can go out to 30 years, and that's going to be determined by case basis based on your application, because they want that payment to be small enough that it's not going to severely impact your business. It's something that you can afford over the long term, that your business can afford. They don't want to set up a shorter term that's going to create this large payment that, in addition to your decrease in income, you also now have this large payment. So that's the reason they set it out 30 years. You can repay it early if you want to. That's not a problem. They just want to set it up so that you know over the long term you can afford it.
Okay. And there's a link to apply for the loan right here. So at least right now you know what it's going to look like when you get here to apply. And up until just the last couple of days, we didn't have the opportunity in Indiana to apply, but now we do.
Yes, it was posted to the website yesterday around 4 o'clock, so late afternoon. So Indiana is one of the few that is now up and running. So we also happen to be a guinea pig for the application systems. They've come across a couple of glitches today that they're trying to work out, and everybody's in there and it's bombarding and slowing down the system as well. So we are guinea pigs in this this disaster application as well.
Yes, which makes total it's understandable, and everybody's flooding on there. So you can see even right now, my computer is just thinking. It's going to take a while to run the whole page for us. But I did want to try to go through this 3-step process. So apply for the loan, and that's this link, and I will include that when I post this all over God's green earth.
Which is actually the page you just came from. That's where it directs you to. Where we have the 3 circles on the previous screen. That's what that site it's taking you to.
Okay.
That's what it looks like.
And it looks like we already talked about that $2 million for physical damage, what we're going to cover. So how about this? As a homeowner, you may borrow up to $200,000. Is that for if it's a hurricane or?
Yeah, there's different types of disaster declarations. There's the physical disaster type of disaster declaration, like you would have your tornadoes and hurricanes and floodings like we've seen in the past. Or we have the economic injury, which is the EIDL, which is Economic Injury Disaster Loans, what that stands for. So there's two different types of disasters. So unlike the physical ones, which we've seen in the past, this is fairly new to us because we haven't seen this one so as much. It's the economic injury. So because of a virus that isn't a physical nature, the whole United States is being affected by it on an economic basis. So you don't necessarily need the money for repairs or replacing property that's been damaged. It's a repair and replacement for your income is kind of the difference between those two.
So do you know then where it says you may borrow up to the $200,000, is that, does that kind of include your loss of funds because your small business isn't making money right now? Could you still take money out to pay for that? Or is this strictly just to cover any damages?
Well, typically you won't have a physical damage because of an economic injury. Your buildings and everything should still be intact. So you probably won't need use of proceeds to repair or replace a property because that just doesn't exist. But yeah, if for some reason you did need a repair or replacement because of a disaster, yes, certainly that's the best way to do that. For an economic injury loan, though, it's more focused on your daily operations, not necessarily any losses that you'd had because of a disaster type situation. So it's replacing that operational income. So if there are repairs and damage to your property that aren't related to the economic injury loan, you may be better off going with a different type of program for financing.
Okay. Okay. So now say we have applied and then we need to verify. And that means that it's being reviewed on the back end. Do we know how long we can expect before we hear something?
It's going to depend on how much you're borrowing. Loans of $25,000 or less don't require collateral, so it's basically up to a $25,000 unsecured loan, and those take about 5 days to review and anticipating 3 weeks to funding. Now, if it's more than $25,000, they're going to ask for additional financial information just as you would apply for a loan at the bank. So they're going to ask for tax return information and verify your taxes through the 4506 process, et cetera. And they're going to ask for your personal assets and liabilities as well as your business assets and liabilities and that kind of thing. They're going to look at it as a traditional loan. It will also require collateral. So the real estate is their preferred type of collateral under the economic injury loan. If real estate isn't available, they'll look to business assets and other types of assets that are available to help secure that loan. So that's something to consider, because when you go into a larger loan over $25,000, there's a little more financial analysis, and you also have the due diligence of actually perfecting the liens on those two. So it could easily be more than 3 weeks to get that funding.
Okay. When I'm thinking about the different clienteles, we have Jackie on here, which owns High Point Ready, and which is an e-commerce site. And then she also owns another business that is real estate, so rentals and things. Okay. And then Laura, what she owns is Das Fort, and that is a marketing and digital marketing company. So thinking of even just these two, we have a good amount of people who do e-commerce and a good amount of people who do marketing as contractors. So how can this help those two industries?
If you can have an idea of how much you want to borrow, so you know where that you fall on that $25,000 requirement of collateral, not is helpful. If you need money just to get you by for a couple of months, but you don't know how long this economic injury is going to last and affect your business. And when you make application, you can go in and request additional funds just because of the length of time it could potentially go as far as economic injuries affected by. So they did tell us in a conference call that if you do make an application and you find out you do need additional funds afterwards, you could reapproach them and ask them for an increase to your loan request. So that is always an option as well. So if you're looking for something just to get you started and kind of tide you over for a while to see how this goes, you might want to look at something under $25,000 because that way you should be able to get your money a little quicker than when you would without maybe having to secure the collateral that would be needed for over $25,000.
Okay, wonderful. Thinking of, we have a lot of our clients who actually are working maybe a full-time job that also have this, I don't want to say side business, but maybe they're just working part-time to help fund them while they're creating their business. Is there any restrictions or any information we should consider if someone's looking for disaster relief for that scenario? Is that an option?
For their personal income that they have, or
whatever income that they aren't making. So say we have a woman who sells pies and she is now going much more digital, so trying to sell subscription based or pie of the month or something. But say she also has maybe she's working part-time on the side. Can they still apply?
Oh yes, definitely. You can apply for the business. It's not just this particular loan is for business funding. So if you're trying to incorporate your personal income from an outside source of income, that falls more on workforce development and unemployment, where the business side would be under this business type loan. Does that help answer your question?
Yeah, that helps a lot because, we might have a yoga instructor who is instructing, that's where she makes the bulk of her pay, but maybe she also does something on the side. And so just making sure that those types of people can still apply and feel comfortable knowing that as long as they're under that 25,000 for that first application, that they're going to be able to still receive help.
Right. Yes. Yeah. Okay. On the business side, definitely, even if it's a part-time business, yes, they would still be eligible to apply. Now, if it's your personal outside job, where you're actually a W-2 type employee or maybe a 1099 employee, that goes along more with the unemployment office instead of our programs.
Okay, wonderful. And then you can go ahead and check in here as well to make sure that your application is being looked at. You can kind of follow it almost like tracking a package, or is that how that works?
Right. So the three circles here, the first one, the red one, was making Indiana eligible, and the governor of Indiana had to go and do some due diligence and actually see how Indiana was affected, and at least 5 businesses per county, for each county to be eligible, had to be affected. So they had to gather that data and get it to SBA and get it listed on the eligible disaster areas for Indiana to qualify to even apply for the loan. So that's done. Indiana's listed. We're one of the first states to be listed. So now the businesses located in Indiana can go into the blue circle and actually make an application for a disaster loan. And then it's a step-by-step process. The Small Business Development Center has put together a step-by-step screen example. So if you need assistance on what the next screen or what looks like, that is available. We can get you the link if you don't have that already, but that is actually your application. So once you have your application submitted, the green one is, okay, where's my application? Where is it as far as processing? It puts you in that, kind of like the IRS, where's my refund type of status. Same thing here. It's where's my loan? How's my loan being processed? Where is it in the process type of status? I don't know if it'll give a timeline or not, as far as like that 3 weeks that they talked about getting potentially money out to you, but it kind of gives you where they are in processing the application.
Okay, wonderful, because that's right there, just peace of mind, knowing where they are in the process is huge.
Right.
Okay, wonderful. Does anybody that's attending right now, do you have questions that you would like to ask our direct lines that are on here for support?
Just to kind of give you a heads up, Indiana is the first, one of the first states to be listed as eligible. We're running into a couple of glitches. What we have found earlier in the day was if you go in the application, you have to select which disaster you're applying for, and people would click on it, and it would say, no, your area doesn't qualify, your area is not eligible yet, which it is. So there was some sort of computer glitch going on.
Okay.
So they're working to get that corrected. Sometimes if you select just Indiana, because the entire state is eligible, you can skip the county. That might pull it up. Also, it might be caught in a loop, so you might have to exit completely out of the browser and open it back up to refresh that site to get it to work again. A couple of different options that we've come across this afternoon that seem to be working. So keep that in mind when you go in there. And there's thousands of people on there right now, so it is, again, like Leslie showed, it was moving very slowly. So please be patient with it, and hopefully you can get your application completed soon.
And we do have Laura raised her hand, and Jackie. So good, everybody has a question. Jackie, since you're already on here live, go ahead and ask.
Yes, I know you talked about for these disaster loans that they were 30-year terms. In terms of when the repayments start, and I don't think we covered that, is there is it the repayment starts immediately, or is there any kind of delayed 6 months without payment type of thing, or do you know of any of that?
Yes, the payments will begin 4 months out once it's approved. You won't have payments until the 4th month. And
Okay.
Not everybody qualifies for a 30-year term. It's going to be on a case-by-case basis on what the disaster office who's processing the applications thinks is a good fit for your business. So that will be determined on an application only as far as the length of term is.
Okay, great. Thank you.
You're welcome.
And Laura, what was your question? I think we'll unmute you maybe.
Oh, I typed it in the chat as well. Would you say, in short layman's terms, generally speaking, can almost anyone get disaster relief? Is there anyone who can't? Are there any exclusions?
Everybody can apply. There are no fees or a cost to apply. So yeah, you can apply, and it's going to be based on a credit decision. And they do look at a credit elsewhere and that kind of thing. So not everyone that applies is going to receive a loan, but we try to help finance as many people as possible. If the disaster office reviews your application and they feel that you could qualify for other types of financing programs outside of the disaster program, there's a possibility you could be denied with a referral to look at other types of financing because they think you're financially strong enough to obtain financing elsewhere.
And how quickly, approximately, can people expect to receive financial assistance?
From what we've been told, once you have an application, it takes the disaster office approximately 5 days to review that application, and then funding should begin within 21 days, within 3 weeks. So hopefully you have funding within 3 weeks of an application.
Thank you.
You're welcome.
I had another question that popped in. In terms of, so my real estate company, we've got several rentals that we do, and I've got some tenants that I'm kind of concerned about being able to pay rent in the future. And since they've closed all the courthouses until June now for being able to do any type of evictions, not saying that I want to go that route by any means, that's kind of last case scenario.
Right.
But in the same mindset, we're kind of in the wait and see type of time frame of see which tenants are going to have issues. So in terms of how long are the disaster loan assistant application going to be available? Because if we get to a point in the next few months type of thing where we need that, is it still going to be available, or is it just kind of a get it now while it is available?
I believe, I can't get to my copy right now, but if you click on, I don't know, Leslie, can you click on the red and see if you can open it?
Sure.
I believe there are dates in there that the program is available, and I haven't checked what those are. But usually it's, you have, and it's going to depend on how long the impact of this disaster is effective as well. It will still be effective for a while once it's determined that the virus is now run its course and things are getting back to normalcy. But usually they'll have a date out there under the eligibility, the red eligibility circle.
It won't let me go through. I don't know if it has anything on this page.
Okay.
No,
it won't have it on there.
Okay. Still thinking.
And I don't know how on my computer to switch over to get to my browser, or else I would try as well.
If it helps, so if I stop sharing my screen.
Okay, there we go.
Yeah.
let me see if I can get in there as well.
Okay.
And see if it comes up quicker for me. No promises.
Yeah, oh, that's completely understandable. You know, we have another question. We have another gal that doesn't like to be on video, so she's sitting right over here, and she's asking if something happens and or if someone has to apply for bankruptcy, what is and they've already borrowed and received the money, what happens?
Okay. Just like any regular SBA loan program, it will go through the bankruptcy process as well. If there's collateral that goes along with it, they'll have to go through like the collateral, potentially liquidation, depending on the value that's collateral value that's in that particular piece of the item that's pledged, and they'll go through the process. If the SBA loan is not completely satisfied, you can set up a payment plan. And if you just can't pay it all, it goes through charge off. It will go through Office of Treasury, and the SBA will try and collect via other types of government payments, maybe through, I had a lady call this spring that she was supposed to get a tax return, a refund, and Treasury took that and applied it to her outstanding loan. So those are kind of things that could be offset to help repay that loan. It's just going to be outstanding. It can also affect any other future government benefits that you want to receive, or if you want to apply for loans in the future. If the government's taken a loss, you're probably going to have to repay the balance in order to qualify for any additional benefits as well.
Okay, that was a good question, because we just don't know what's going to go on. Okay.
So there's on the red section it's got the state affected, what the incident is called, and the incident period. And for Indiana, the incident is coronavirus, and the incident period is just January 31st, 2020, and continuing. So they haven't set an end date at this point in time. So once they set an end date, that will wind up the applications. So at this point in time, I don't know, they haven't defined when that's going to end.
Okay, thank you.
Mm-hmm.
Does anyone have any other questions? No. Oh yeah, that's a good one. Go ahead, Laura, and then I'll have one. Mm-hmm.
So did they say the maximum loan amount would be 50,000?
The maximum loan amount per small business is $2 million per small business. That's going to depend on the needs of your businesses too. If you're a small business only making $50,000 a year, there's probably not a need for $2 million for your business. They're going to look at your business needs and consider that in the loan request as well.
And then is there any minimum or no minimum?
I'm not aware that there's a minimum.
Okay, thank you.
So another question from the peanut gallery over here is, so we have two. One is, what happens if you have two businesses?
Each business should qualify for $2 million, but it may look at affiliation, ownership affiliation as well. For SBA or regular programs, for example, our maximum loan under 7A is $5 million. But if you have multiple businesses that are requesting SBA loans, you have a $5 million limit per person.
Okay, that helps because that is the same for Jackie and Laura and a lot.
Yeah.
So that's great. Okay.
So I have a feeling the affiliation rules will also apply to disaster as well. So it would be per person, per tax ID number.
Okay, perfect. And then the other question was, you know, oftentimes with our launch women's, with our accelerator, we give a $1 award, but we don't necessarily require them to send any receipts or show us what they spent it on. We have the discussion and we follow through with that. But is there any accountability of what they have to use these dollars for?
I don't know that they're going to verify the use of proceeds. For the 7A programs, they do require receipts and expenditures, or if you're invoices, if you're buying equipment or whatever that is. I am not aware that they are requiring that you have receipts and uses of proceeds, proof of purchase type things for the disaster program.
Okay. Okay, wonderful. Any other questions? No? Well, I want to thank you personally, Bill. Thank you so much for walking through this. I'm going to probably splice this as well as keep it whole to make sure that I can send it to send it out in email. Thank you so very much, Laura or Luann. I emailed her at the last minute. I was like, hey, we're going to do this. You want to jump on? So I am so excited that you were able to do that.
Oh, you're welcome.
We have so much support from the SBA, and so if all of you who have attended today and all of you who are going to watch this recorded, please spread the word that you can connect with any of us who are supported by the SBA, and we will give you as much support as we possibly can. We want to give you all the information that we have, and we know that right now is not a fun time if ever there is to be a business owner. So we are all here for you. We're in this together. So thank you very much, and I will end the meeting and then send this recap out everywhere that I can.
Thank you so much for having me.
Thanks.
Thank you.
Thanks.